number 2, you're going to be completing a escrow settlement sheet. You'll be calculating both the seller and buyer's debits and credits for this form. That is the main function of this assignment, to get an understanding of how to apply debits and credits. So with this exercise, you're going to be using the information we used in written assignment number 1, where you created the memo sheet, and we'll be using the same purchase transaction from that assignment. In the assignment instructions here, you're going to, again, review that purchase transaction form and your escrow memo sheet, and then you're going to upload this escrow settlement spreadsheet. Before you get started on the assignment, it's recommended that you go ahead and read the section in the book pertaining to settlement sheet and debits and credits, which you'll find on pages 177 through 182. And within that section, there's figure 6-4, which provides a visual example of what a settlement sheet would look like. And that will be very helpful when you're doing this exercise. Now, be aware that this form I'm providing is standardized, and not every single field on the form will be filled in with data. Only the things that we are getting from the instructions. We are in the function of an escrow assistant, and the escrow officer has already prepared the escrow memo. And now we are going to help prepare the settlement sheet, and we're at the point in the transaction where the buyer is getting their loan documents signed, and they are having their loan funded, and we need to determine from the buyer's side how much remaining funds they have to bring in for the closing of escrow, and also providing a seller, based on the cost of the transaction, what are their estimated net proceeds that they will get when they close. So again, on the bottom of this page, it's giving the purchase transaction scenario, which we're familiar with from exercise 1. On the next page, we start the instructions. So again, what we're trying to do is fill in for the line item charges that we're going to see on this form, whether or not it's a debit or a credit. Now, from our learning from the book, a debit is a cost that is to be paid by that party at the settlement close. And a credit is an amount either that is prepaid, like the buyer's deposit, or a future item to be paid, like the loan amount over time, or is a transfer of funds between one party as a debit to another party as a credit. I'll show you an example of that in just a moment. Now again, we're giving information about what are the actual charges we're filling in on the sheet here. And again, we're determining what is the buyer's balance of funds they must bring in for the closing. In escrow, what happens is they sign the loan documents. They have to bring in the closing funds, and then the lender funds the loan amount. The combination of the buyer's closing funds and the lender's loan amount is the total amount to complete the purchase. We also want to give the seller notification of what their estimated proceeds are from the sale price minus all of the transactional costs, including commissions and title and escrow charges, any other miscellaneous charges. So from here, from this list, we're giving you line by line information that you will use to fill in the form. Sale price was $470,000, and it's mentioned here that it's both a debit and a credit. The sales price is an amount of money that the buyer is paying for as a debit, and it's the amount of money that the seller is receiving as a credit. And I'll show you that on the spreadsheet in just a moment. We have to look up what the buyer's loan amount is. That came from the purchase agreement. How much their initial deposit amount was. That's also, all this information is coming from the memo. And going through a bunch of different things, we calculated what the seller is paying for in the commissions to both the seller's broker and the buyer's broker. Keep in mind, in real estate transactions, traditionally the seller pays both brokerages the commission amount. There was no seller's loan to pay off, so we're not going to have to pay off any existing liens. The house was free and clear. It's not coming out of pocket, it's getting added to the loan. Now, one of the major parts that you completed for exercise 1 was what the prorated tax amount was. And many of you got that, and some it was a little bit of a challenge, but just keep in mind the steps that you took. Number 1, we have to know what the date of the closing is. In our exercise, we had said that the 6 months, a second half payment of taxes had not been paid. That total amount of tax was $538.17. sense.
fee. Remember, we pulled credit
The question
when we first
from
started
them
the loan,
exercise
so I didn't
one
charge it
was
up front.
how much of it is prorated that the seller pays of that total amount, and how much remaining would the buyer pay. And that proration amount is based on the date of the escrow closing.
Title and escrow fees. Okay.
So in this, you have to calculate
this
this process, and we'll give you a hint on that in a second. Then we have other charges in here that you'll go down by the line items. Buyer's loan origination, appraisal fee, credit report. Where it says here buyer received a credit, that should give you a hint whether it's a debit or credit for the buyer. This is a credit from the lender. This is monies that the lender's paying in to cover some to reduce the amount of closing costs in essence, because the buyer decided to get a little bit higher quarter point interest rate.
Then you'll
Fixed
notice
interest
there's
rate
a
increase.
lender's title
So in other words,
policy,
the
and right
lender
under
gave
there's
them
owner's title
some
policy.
credit towards their closing in
Title
exchange for a little bit
insurance,
higher interest rate. That's
is
something that
bought
does
by
happen
the
from time
owner
to time.
for the borrower. See, this is a seller's
Okay,
fee.
so
They are buying a title policy
there's
to ensure
a
that
loan
when you
amount
get that
interest
property,
for the buyer
it
that must be
is
paid
free
as
of
of the
any
closing April
encumbrances
the
that the seller might
24th.
have had.
So you have to calculate
property taxes
that
are paid
amount.
up to date.
It's 7 days at
There's no liens on it.
$47.64
There's
daily
no
interest.
assessments.
Remember,
that
the
have been,
buyer's paying interest from the moment
title
that they close
policy
escrow.
is ensuring that they
Regardless
have
of
checked
their
back through the
mortgage
records.
payment, which would
They
actually
have,
be 1 month
audited
past
the file, and they are ensuring
the end
that
of the
they've
month,
covered everything and made the
would be
seller
their
pay
first
everything
date, but that's
to get it clear, so that when you get the property,
it's not material for this calculation, but because they're basically closing in April, their first payment would be June 1st.
And
but the interest is paid throughout,
trainer,
and the 7 days get you from the date of closing till the end of April, and then the first month's payment in June covers the interest for May.
We're going to go ahead and get started. This webinar
hazard insurance by the buyer. It's a buyer charge.
Focusing on
escrow charges. When we say an escrow is charged 50-50 split, that means you take the total escrow amount, cut it in half, and it's a charge to both the buyer and the seller.
Many of you guys are going to be
both buyer and seller are paying an extra wire transfer fee with wire transfer funds,
seller
so
or the
they
buyer
both have to pay that
always
fee.
asking you questions like,
there's a tie-in fee on the buyer. That's an extra escrow charge.
At a certain price.
The seller's paying for the for the title insurance policy. There's a charge for that. And then the lenders are making the buyer pay for their title insurance policy as a part of the lender's closing costs. So that charge is also there.
We're going to be doing some demo examples.
And as you read down, we remember the documentary transfer tax. We did that in assignment 1 as well. You calculated that amount, which came out to $517.
It's got a pretty
and then other parts that came from the purchase agreement.
For loans.
And there was no termite report requirement in the contract, so there's no termite charge
while we're doing the
for repairs or for the report.
So
now we're going to go in real quick to the spreadsheet.
To look at how the
I'm not going to fill all this in for you. That's your assignment to do, and you'll be turning it in to me as your professor. And ultimately, the escrow officer relying on your information. But as you're looking at this sheet, you'll see the line items in here. Now, this is blank, and I filled this in to get you started. But we do have the calculated escrow closing date, as you did in assignment 1, which came out to be April the 24th. Of 2019. Why is this date important? For proration purposes, for example, on the property taxes, you had to calculate how many days from January 1st to April 24th. Literally how many days. And from that, you calculated the daily rate or proration amount, which came out to a dollar figure multiplied by the number of days, and that was the seller's property tax proration from the total amount. And the remaining amount would then be applied towards the buyer. They're paying the rest of that.
Also, we're going to be focusing on the title insurance.
Now, I mentioned when we talked about the purchase price of $470, the buyer's buying the home and they're paying. It's a debit on their column for $470, and the seller is receiving that payment of $470,000. That would be a credit on their side.
Sometimes
keep in mind that unlike accounting, this type of debit and credits on these columns for seller and buyer, it's not like every line item has a debit on one side and a credit on another. It's not like accounting in this case. You're only applying if there is a fee charged to that party as a debit, or if there's money received by that party as a credit. Okay, so usually whatever amounts you're putting in are only on the seller side or only on the buyer side. Unless I indicated, for example, the escrow fee of 50-50, they're both paying it, and both would be a debit. So I entered in here the loan amount, and I entered in the purchase price
Okay.
of $470.
So invoking the
Now
seller's
the buyer
net
is
sheet,
getting a loan from the lender, and
what
that's
you do is
$376,000.
you run the seller's net sheet.
And you'll
within
see that I
Matrix
indicated that's a
under
credit.
finance.
That's something they're going to pay in
Click
the
on
future.
finance and then
Monthly
the hard
payments
seller's
for the
net
next
sheet. So
30
let's go ahead and
years.
do that.
So it is not a debit. We don't want to
Always
add
have to start at the
470 and
home
376.
Screen.
What
as
we're
well.
doing is subtracting these two amounts, and from that, and then adding in charges to find out how much is their down payment and closing costs total combined.
Good.
Now, also to get started over here on the seller's side, they have
And then what we're
commissions
going
that
to do
they're
is here
paying.
we
So
click
I
on finance,
indicated
hard seller's net
the
sheet.
seller brokerage is 3% commission, and you'll fill in the buyer brokerage is 2% commission. These are things you calculated in exercise number 1. There's no payoff of the
I
seller
hear some
loan, so
background
just
noise.
letting you know that's
If you can
zero.
Put your phone on mute.
But then you're going to have the
That'd be real
prorations. So property tax prorations, the seller is paying an amount and the buyer is paying their amount of the proration. So those are both obviously going to be debits.
helpful.
And
So
just
we
going
invoke
down
that.
the line and filling in the
My
other
internet's
things
kinda
as
slow,
you've
looks
been
like.
instructed in
But,
this exercise.
Should be coming up.
What
here.
I'll show you at the bottom is
So
where your
here's the
columns
seller's net
balance
sheet.
out
Here's what it looks
for
like.
debits on the buyer's side of
And the
470
way
so
you
far,
just
although
start
it's going to
filling
be
it
a
in,
different amount
put
when
in
you
the name
finish,
of a user, of
and
the
how many
person.
credits towards the buyer. And what happens on the
Here
spreadsheet,
we
this
can just say
calculates
it's,
automatically.
John Seller.
And at the bottom here, it will tell you at the end of the exercise what is the total amount the buyer must bring in
And
in
you can type in
funds
the
for
zip
the
code.
closing. This is very important because
So what,
when the
what I
escrow
did is I
officer is
picked a
sitting
house
down with their
that's,
buyer and
nearby
they're signing the
where I
loan
live.
documents, they're going to tell the buyer, okay, you
And
must
we're
now wire in X amount of dollars,
listing
which
that
will be
one.
indicated here on the
So the
spreadsheet.
owner wants to be.
They can wire those in. They will
wants to be
have the
aware of what
funds
the
then
net
available
proceeds
with the
are.
loan amount that
Now another
comes
thing
in
is you have
to
to
have all the funds ready to
actually
prepare
pick
the
on
closing.
a closing month.
And then over
Even though you
on
don't
this
have a
side, they can
contract at the
present the
moment,
seller and
just kind
say,
of do a
yes, you're sold the home
you
for
know,
470, but after all the costs of the transaction, what you'll actually take
guess,
home
you can say.
in net
Like
proceeds
right now,
will be
we're in
this
the month
amount.
of October, so you can just
So,
say, well,
so
you
you
know,
get a
it's
general
gonna
understanding
be,
of this form, and again, you'll be
closing
filling in all of the
November
line
15th.
items as described in the instructions.
Usually,
So
when
again,
it's a mortgage involved,
you know,
there's always about 45
read again
days.
the chapter in the book, go through
that
the
you
exercise,
calculate
look
for
at figure
closing.
6-4.
And then we said it was going to be a
If you have any general
conventional
questions,
selling
obviously you
price.
can
We
shoot me
said
a
it was going
message
to
at
be
any time.
$175,000.